Chief Investment Strategist at SJS Markets Limited, joining us live from Hong Kong. Derek, good to have you on the show once again. I thought it was kind of interesting. You know, we got some decent numbers out from the economic side in the US last night in the form of pending home sales, and yet the dollar was weaker. And I ask this because normally what we're starting to see here is that as we get good economic data out of the US, we start to see the dollar gain because people are starting to bring forward their pricing for the first Fed rate hike, but not so last night. Why not?
That's precisely because the data did not impact the market expectations regarding the Fed tightening outlook. Investors are still betting that the first hike will occur probably in September. The reason why the data didn't change their mind was that it came close to consensus, and in fact vehicle sales were a little bit weaker than anticipated. But overall, improved sentiment globally yesterday brought back some of the carry trade, and that's why the dollar was the weakest major aside from the Aussie, and also declined against emerging Asian currencies.
Yeah, absolutely. The Aussie took a real tanking, didn't it, after the RBA decided to keep its rates unchanged, despite the fact that actually there were some in the market, I think about 30% of market players expecting an unchanged result. What do you think is the outlook for the Australian dollar on the back of this decision by the RBA?
I believe that markets will now be more cautious in anticipating how much the RBA is going to tighten policy in the course of this year. I believe that we are still going to get about 100 basis points in hikes this year, but more importantly for the Aussie, my view in the short term is that risk appetite is likely to return to global markets after it was pulled back in January. And the reason for that return is that as we see, for example, from US Q4 GDP numbers, the global economy continues to accelerate and will peak only in Q3. So it's too early for risk aversion to come in that far ahead of the peak in global activity. As a result, the outlook for the next 2 to 3 months is positive, and I think that the Aussie is going to move sharply higher, trading close to parity by the end of first quarter.
Hey Darius, it's Maura here in Singapore. Do you think we're going to see much more support for the euro? You know, later on today we've got, of course, that EU report on Athens' new budget plans. You've got non-farm payrolls coming out later this week. So what's going to happen to the euro in the meantime?
I think that euro is approaching attractive valuation levels. However, macroeconomic data will not be the key driver of the value of the common currency, but rather the issue that you mentioned, the Greek deficit problem, as well as issues with fiscal situation in other peripheral European countries such as Spain, Portugal, and Ireland. When you see what's been happening to the euro over the past 2 months, its value has been very strongly negatively correlated to the cost of protection against Greek default. So everything hinges on how market accepts an approval by the EU of Greek deficit reduction plans. I think that some concerns may still linger, but it's quite likely that the euro is bottoming out, and I think it will be trading at 1.47 within 2 months.
All right, Darius, thanks so much for joining us. Darius Kowalczyk, Chief Investment Strategist at SJS Markets, joining us there. We are